Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, June 26th. Well, what do we say about Friday's session? Just more of the same, and we're starting off here with the Dow Daily, but let's go check out the SMH because this is just, typical of this market. You recall on Thursday we were looking really, really good going into the Friday session. Everything looked great. Fantastic reversal in the SMH. And then Friday rolls around, and it's almost like that bottom action we saw on Thursday, never happened. That it was an illusion. And the reason being, of course, the same old song and dance. No coincidence at all. It just tells you how crooked these markets are. Thursday, we had that big midday rally on news that Greece had come to an agreement with Europe on the austerity package, and everything looked great. So what do you think happens on Friday? All of a sudden now, Italian banks are an issue. We had some Italian banks halted after, Moody's came out and threatened to downgrade. If it wasn't so obviously crooked and manipulated, it would be funny. But it's not, and it's just absolutely ridiculous. And it's why, even though that market looked great on Thursday, we didn't go shopping for a whole lot of plays. We really didn't do anything. We're still staying with our high cash trading intraday stance. And, until we see this market move for a few days in a row, we're going to continue to adopt that. Everyone is getting hurt in this market if you're swinging stocks. Look at the shorts on Thursday. They got run off on that big reversal and covered, and a lot of them went long the market, just like a lot of traders went long the market on Thursday. And then look what happens on Friday. Those same people get screwed as the market ends up giving up all its gains on some bogus news. So we continue to have this schizo market, and while we continue to have this schizo market, we're going to continue to do intraday scalps, keep high cash overnight, and, be a little bit patient. Now, we had the same almost mirror action. I've been saying it over the last 2 months that this market, did we go back in a time machine? Because it is exactly the same as this time last year. And actually, if you go look at the quotes, go to Yahoo Finance, pull up the quotes from May 1st through August 1st, and just check out the similarity. There's a point difference is a little bit different, but we had this market do the exact same thing going into month end, the end of the month last year. And then we started to see the market rally after the July 4th weekend, and we ended up rallying almost 900 points during the 3 weeks after July 4th. So we're probably looking at the same thing again. And the reason I say that is, the dollar is inching ever so higher up to that 200-day moving average. And you recall, wherever the dollar goes, the market goes the opposite. You don't even have to look at the dollar chart. Because the market was down 100 points, you can almost guarantee the dollar was up on Friday. And this stochastic action again, I'm not very optimistic going into this week. I hope I'm proven wrong. Maybe that's the key. We just all need to get on the bearish side of the boat for this market to pick up steam. Russell, nice big bounce, which is going to muddy the waters on Monday and Tuesday. If you look at the pop scan, there are a lot of very nicely set up charts. But a lot of those stocks had big moves Thursday and Friday due to the Russell rebalancing. So I'm glad we are high cash going into tomorrow, just because it's really uncertain how these things are going to go. We've got the Russell here. We had that head and shoulders breakdown. We bounced off the 200-day moving average, and here we find the Russell having issues breaking back above that neckline. And, if you're familiar with head and shoulders formations, I'm not liking what I'm seeing here. We really need to see the Russell break up through the 810, 815 area early this week, or we could be seeing a retest of that recent low on the Russell. And the reason being, whenever you have a classic head and shoulders formation, left shoulder, head, right shoulder, broke down. This was the neckline breakdown. You can see when we did bounce, we bounced back to the neckline. Typically, when you see this happen, there's another breakdown, and that's why I'm not as bullish as I normally would be on this. What are we not? Oh, Dow Daily chart, big volume uptick. Not the greatest chart as well. Also, I do not like seeing stochastics move up here up through the 50 level and then back down. It's just another thing that gives me a little bit of caution going into the market. Now, we did have some very nice movers on Friday. NEI, huge volume move that was a 3 million share block in after hours. We had a nice little spike on this baby on very, very heavy volume. Actually, this is the heaviest volume we've had on NEI, I believe, in a year. Breakout here is 121, and then we will be looking at that 50-day moving average up there at 145. This is the first close above the 20-day exponential since the stock tanked from 224 back there on the earnings sell-off. RSI breaking up through 50, positive ADX cross, stochastics up through the 50 level, and then unbalanced volume just went vertical on Friday. So, we're looking pretty good for some follow through on this one early this week. Sirius, this one has been all over the map. It's essentially trading between its 50-day and 8-day moving average. So, next bounce target would be bounce back to that 50-day. And we're looking at a positive MACD cross, hopefully early this week. Now, Move, remember the HomeAway IPO is supposed to be Tuesday or Wednesday this week. So, this, like many other stocks, looks great one day and then falls down the next day with the market. If we get a dip on this one on Monday, I would definitely be looking to pick some up as a sympathy play on that HomeAway IPO target, 220, 228. And remember, this is a stock that will probably get bought out sometime this year and, is woefully undervalued in my opinion. COSI, nice little bottomed out play here. Breakout is $1. 50-day moving average 113, stops 89 cents. We've got a positive MACD cross. Stochastics nicely oversold, and this one looks pretty good. As for Russell deletion plays, those were actually the stocks that were up on Friday. And that is something I mentioned that typically happens. Some of these stocks that get deleted, a lot of the selling pressure you see going into the Russell rebalance is the funds selling out ahead of that. And then once the event happens, you have funds moving back in. And that, if you look at a lot of the deletion stocks, this is a typical chart pattern you see here. Breakout 130. Now that the Russell issue is over, this would make a great add, in my opinion, under $1.20. Going over a couple of the popper scam plays that jump out. FTWR, these guys got deleted from the Russell. They've got a lot of issues, debt issues, etc., etc. But, this is a stock that when it gets volume, tends to get a nice little run. Whether it sees follow through remains to be seen, but a break of 140 would definitely bring buyers in on this one, and you could get a 10 to 15 cent move on it. Another one, CWTR. This one decimated over the last month, almost like the chart of NEI. This is a stock that has not visited its 20-day exponential. And, if this one, it got heavy, heavy volume on Friday. If it got a break through $1.40, just like FTWR, you'd be looking at a possible 10 cent plus upside. The uranium stocks were actually pretty hot on Friday, and they're on the pop scans again. URR or URG and URRE. Look pretty interesting. Tough charts to buy here, but, if you're looking for a couple of pennies, you could see that come tomorrow. MTSN is one we've been watching for breakout over the last month, and, you can see it does really big intraday moves. 183 is going to be an interesting level if it gets a break, and it's one of those stocks that if you do jump in on that 183 level, you want to probably keep your stops really tight, and 195 is probably where I would shoot for as an upside target. OPXT 242. Again, 5 to 10 cents is all we're initially looking for on these pop scan plays. We also have a positive MACD cross coming tomorrow, and we also have stochastics up through the 50 level. So definitely one to keep an eye on for 242 break. Stops on this one, I would keep my stops really, really tight just because we know how frustrating this stock can be. But if the breakout comes on volume tomorrow, definitely worth considering for some more upside. AVNR, looks like we possibly have a bottom here. You've got about, 25 cent upside to that 20-day exponential here. Nice little bounce. Volume is starting to pick up after that big sell-off recently. So again, for you looking for that, the higher price ones, this is definitely one that could give some nice action early this week. Last one we're going to look at is AMCC, semiconductor play. Again, the reason I would look at this one, we have a possible bottom in it here, and as you can see, this stock loves its 20-day exponential. We had a spike a couple of weeks ago back up to the 20-day, and now the 20-day is about 50 cents away, so about 6% upside here. If you jump in on this one, definitely keep your stops pretty tight on it. And, if the SMH is going green, definitely one to look at for a play on the SMH move. So that's it for the video. Again, I know this market is really, really frustrating, but, we're just staying out of harm's way right now. This market is a killer for shorts and longs, so keep that in mind. The best place to be right now is cash. And, we've got our fingers crossed that we continue to see the same market action as we did last year, which would imply a possible bottom this week. And the problem with a lot of these bottoms recently, they only last a day. And just when you get comfortable buying stocks, some news comes out of left field and just hammers the market again. So we need to see this market start to build up some steam. Everything is really, really negative right now. The economic reports, though, even though you see a lot of bearish talk, the durable goods report was really, really good this week. And, that report tells us that the lag we had in the economy may finally be passing. Remember, the Japan earthquake screwed up a lot of supply, and it looks like that has finally come back online, and we've got gas prices coming down nicely. So we've got a double injection for this market going forward. We just need to get through this European BS in the near term. So that's it for the video. See you guys in chat room tomorrow. Goodbye.